So in today's video, what I want to do is talk about how to trade stocks safely. More specifically, I want to show you the framework I've used to get the best of buy and hold while avoiding the worst. Said another way, I get the gains of buy and hold while avoiding the losses. Now, that sounds like hype. People are like, is that even possible? You know what? I didn't think it was possible before either until I was shown exactly how to do it. And I do it by following a framework I call PGI. But before we get to that, let me introduce myself for those who don't know who I am. My name is Travis Wilkerson. I am the 2019 U.S. Investing Champion for the Futures and Options Division, as well as the author of the best-selling book, Option Trading Made Simple. But I go by Trader Travis online. Now, what I want to do is walk through the PGI framework, give you the big picture overview, and then I will compare it to some real world examples so you can see how I take every investment opportunity and I compare it against what I call the trifecta of wealth building, right? There's three skill sets of wealth building, which I may get into a little bit later, but the first skill set is you have to learn how to make money. Second skill set is you have to learn how to keep the money you make. And then the third skill set is you need to learn how to grow the money from there. A lot of people only focus on the first skill set, making money. Then they make a lot of money, through crypto, meme stocks, they get lucky and then they lose it and they can't figure out why. It's because they never developed the other two skill sets. So this framework right here allows me to both make money, keep it, and then grow it from here. So what is a PGI framework? I often also refer to it sometimes as PPI, protection, growth, and income, or either protection, profit, and income. So step one or commandment one, I look at them more or less as investment commandments I follow. I have them in the orders I think of it in. Is first, I think about what can put me out of business, and then I protect against that. And the reason I have this first is because if you think about it, what puts people out of business? Making money or losing money, right? What causes people to fail with investing? Making money or losing money, right? So a lot of people focus on making money, but that's not what causes people to ultimately not achieve wealth. So I achieved financial freedom when I was 34, and I haven't had a corporate job since. And it didn't well. I achieved financial freedom, focusing on making money and making it very quickly. So making money quickly, safely, and trying not to go broke in the process. Now I stayed financially free, right? I didn't lose my money, have to go back to work. It got a little touch and go a few times, right? But I didn't, lose the money is because I focused on the other skill sets. And so you need all three skill sets. And PGI helps me master all three skill sets. And so that's why I focus on one. Step one is I want to make sure I don't lose money. That is ultimately what causes people to fail. And if I protect myself against that, then it dramatically increases my chance of success. So it's like a counterintuitive or backwards way of approaching success. Most people just focus purely on success. What do I do to make more money, aka success? No, let's protect against failure, right? If you protect against failure, you get that out the way, then dramatically increase your chance of achieving success. So, anyway, some of the ways I can do this is by buying stock insurance or risking a small amount of capital. And so, a lot of people don't know there's such thing as stock insurance. It was created in the 70s. I've recorded other videos on that. I won't get into it in this video. But another way is risking a small amount of capital, whether this is trading options or buying stocks, right? So I have a multimillionaire. I'm not really following him now. He sold his company, but he was a mentor helping me invest in individual stocks. And his rule was no more than 1 to 2% of your net worth or your portfolio in individual stocks. And I thought that was rather conservative. But again, he was a multimillionaire. And I'm like, oh, I find that not surprising. Most of the multimillionaires I know are uber conservative, and that's why they keep their money, right? All the other people are like, put half of your account in this stock because of XYZ. He's like, no, you always want to protect yourself, right? We can't predict the future. We have our hypothesis that this is going to be a great stock, but ultimately we don't know the future. So you can risk a small amount of capital. Again, that could be with stocks or option trades. It doesn't matter. The whole point is never put yourself in a position to lose a lot of your money. Right. So once that step is taken care of, then I focus on success, aka making money. That's where the G, growth or profit, again, PPI or PGI. I think of it more as PGI, protection, growth, and income. So step two is I focus on growth, profit. What can I do to make money, right? I try to use a vehicle or product, investment product, that allows me to profit and grow my account during good business cycles, because that's all investing is, right? Investing is a business. You're investing in other businesses if you invest in the stock market. So a couple of ways we can do that is we can buy stocks or something called call options. For those who don't know, call options, they say, oh, options are risky. When people say that, I know they're completely ignorant about options because options were created in the 70s to reduce risk. Quick example, without boring you with the basics of options trading. Call options were created so investors could take low risk bets on a stock's price movement. So that's what step two is. I just focus on ways I can profit or grow. And I could buy call options or I can just buy stock shares. And then the last one here, step three, and then I'll show you some real example of how this plays out. So step three is every business goes through dry periods or down periods. Like every business doesn't make money every year. Sometimes they lose money, sometimes it's just a flat year. So what we want to do is focus on conservative ways to bring in income throughout the year, right? Most of the ways people do that is through dividends, or if you trade options, you can sell options. A lot of people sell options for income. And so when you do that, you ensure that every single year, no matter what business cycle you're in, you're making money. Your portfolio may not be growing the way you want. Like in a bear market, I make money every single bear market. My overall account may be going down a tad bit, right? Because we're in a bad business cycle. However, I am always bringing in income, and income I control. Right? I don't control dividend income, but when I sell options, I control that. Well, when the market is a flat period, my portfolio may not be growing because the stock market is flat. But guess what? I'm still bringing in income. And even in up markets, my portfolio may be growing at 10, 15, 20% a year, and still, same deal, I'm bringing in income. So step three ensures that no matter what business cycle we're in, I always make money. So again, PGI is a framework, and this is what it looks like in real life. So let's think about traditional buy and hold, buying stock shares right here. This setup you see is called enhanced buy and hold. I'll show you the full setup here in a second. But let's think about traditional buy and hold and then compare it to my three commandments of investing, PGI, protection, growth, and income. Buy and hold, does it give you growth and income? Yes. But does it give you protection? No. That's why people lose 40, 50% of their accounts during market crashes. So I have a choice there. It doesn't satisfy my three commandments of investing. So I can either get rid of or abandon buy and hold altogether, or can I tweak it and improve it so that it does satisfy my PGI commandment of protection, growth, and income? Yes, and that is where I add the second component here. I buy stock insurance, aka put options or protective put options. That's their traditional name, right? So now with that, I get the gain of buying whole while avoiding the losses. And that's how I started this video. It sounds unrealistic, but that's what it is, right? The buy and hold gives me the growth in income. The insurance protects my account so that I never can lose money. I bought this stock at $3.91. I have an insurance policy that guarantees I can sell my stock for $4.30. No matter how far the stock falls. We have a bear market, the stock falls at $200 a share. I have an insurance policy that says I can sell it for more than I bought it for. So just this alone satisfies my PGI framework and allows me to beat the market generally every single year. But if you've traded options and you know anything about any type of insurance, whether it's life insurance, car insurance, it has a cost associated with it. So this is a solution that satisfies my PGI framework, but it's an imperfect solution and has some downfalls. And then I have to think, okay, is there a way I can satisfy or solve these downfalls? Yes. And that is where I add another component in here, buying a call option. Again, that's one of the steps or commandments I follow. I look for something that can give me growth, right? If you look at the value here of these call options, they're profitable up 1750. Are they in the insurance I bought? Every insurance policy costs money. The insurance loses money if the stock market goes up. The stock market goes up more than down. So I'm always losing money on my insurance. But am I really? Right? I'm losing money on the actual insurance policy, but are the calls making more than what I'm losing on the puts? So is this insurance really costing me? No, as a matter of fact, I'm making about 500 extra dollars on top of financing my insurance purchase. So with this enhanced buy and hold setup, this is how I get the gain of buy and hold while avoiding the losses. However, and there's some other tweaks you can make to it, bringing in more income, because dividend income I don't control. So I usually sprinkle in some option selling strategies on top of this. And for any skeptics out here, like, oh, this is a paper trading account. Oh, that's not real money. Well, you know what? Guess what? I use the same thing in my real money account. I teach what I do what I teach. It's just the paper trading one. This is the basic one I use for my training programs. But the same setup is with my real money account, right? They're both profitable, but I just have a little bit more advanced strategies in there, selling more option selling strategies. But that's beyond the point. It's not about having a specific setup and things like that. It's about how you think about investing, right? A lot of people, again, only focus on making money, but you have to focus on the three skill sets to building wealth. You got to make money, keep it, and then you got to learn how to grow it from there. And the PGI framework you see right here allows me to do just that. I have a component of protection in my portfolio, I have a component of growth, and I have a component of income. It's what I call the trifecta of wealth building. So I hope this video has added some value to your life, gave you some insights and aha moments. And if you like this video, make sure you hit the like button below, subscribe to the channel, and then turn on the notifications to let YouTube know you want to hear more from me. You take care, and I'll see you in the next video. Bye-bye.